Good morning, pro traders, and welcome to our Monday market review, where I go through all of the instruments that we trade, including mostly our currency pairs, and also just give a bit of a view on some other key commodities and indices and what have you. Now, first of all, for those of you who are joining me today live in our Discord room, if you do have any questions, please do note them down and we'll discuss them afterwards. If you are watching this as a recording, you're welcome to ask any questions in the comments below this. I recommend that you, if you're interested in staying up to date with all of our professional training, that you both subscribe to our YouTube video channel and hit that notifications bell. And of course, also follow our Facebook page at the Convex Trader. We provide lots of nuggets on a daily basis there to help you be successful in your trading, all based on the experience of long-term professional and successful traders. So make sure you go to the Convex Trader, and also if you engage in the conversation there, it means that you are eligible to join us at no other cost in our live trading room, where we go online and trade live during the week on the lower time frames and teach you folks also how we do it. All right, so make sure that you, if you haven't joined our Discord channel, there should be a link in this post as well to enable you to do that. Okay, so let's jump into the markets. We've starting as always with the Euro US dollar, which really again reflects, I'd say, the general theme that we've been experiencing for the last couple of weeks. Last week was no different in that we're in a bit of a retracement phase in the markets. Looking at last week's candle there, you see it is quite a strong bullish impulse candle, but really all of that, most of that happened last week, Monday. So the rest of the week was really completely flat. But what we're not that surprised about is that in this retracement, the market is coming up to test that 55 EMA on the daily time frame. Always a useful point of retracement for a higher time frame trend. And a potential end to that retracement as well. But as probabilistic traders, we don't make any assumptions, we don't predict, we observe. So let's see what happens here. It's retesting that resistance level again today, and not just on the EMA, but also it is the previous HDC, well, it's actually the HDC's support level or lower bound, which was support and is now resistance, is obviously being tested as well. So we've got some confluence there. But that also means that in the meantime, we're not doing anything on this pair, certainly on the higher time frames. If we do trade it intraday, then we look for a breakout from those lower time frame HTC channels. And quite frankly, that didn't happen last week either. So it looks like there is some intent, market intent this morning, but we will wait and see. All right, so that's our bellwether instrument, if you like. Let's move on to the cable. Well, you can see the picture is very similar, certainly over the last couple of weeks with those two retracement candles. Both of them are impulse candles, just as with the euro. So it is quite a strong retracement. There's no question about that. So interested to see what these markets do as they come into these resistance levels. But really, again, at the moment, this is not an instrument that we're looking to trade in a retracement. Waiting for that to potentially roll over and start moving again. And that, as I say, is really the theme across most of these instruments, which you can see here as well on the dollar yen, which for the third week now has been, and in fact, you could even include that inside bar that we had 4 weeks ago, where you can say that all of this is one big retracement, and I'm not going to argue with you there. And it's still intact. You can see that this bearish cyclicity is in fact pretty much intact, but it is finding support levels here. Let's wait and see if we do get a breakdown in cyclicity here and a resumption in bullish cyclicity that could well presage the start of the next impulse wave in that higher time frame trend that you can see on the weekly. But again, nothing for us to do at the moment. Dollar Swiss, very strong retracement. We've spoken about this before the previous week on the lower time frames. This was our best trading pair. We made the most money out of this trading down on the 5-minute time frame. Last week, though, again, you'll see that the bulk of that move was actually in the early part of the week, whereas Tuesday, Wednesday, Thursday, and Friday, very little actually happened. It was a gentle bearish move, but nothing really to write home about, which is why even on the lower time frames, last week was really pretty flat and uneventful. a good week to find something else to do. Okay, so USD CAD still inside that channel, no change. Last week, bearish impulse candle again, same kind of picture. We're actually just seeing a weakening in the US dollar over the last couple of weeks, and waiting to see if that's going to come to an end. So another one that we're not even bothering with. So Aussie, again, retracement back inside the HTC channel. There's still the potential for a class 1 M pattern over here, which potentially obviously means that we could see some resumption of bearish strength and a repeated breakout of that HTC channel. But for now, that's definitely not happening. And here on the daily, again, you can see how the market has come up to the 55 EMA on this time frame. So it's looking like these moves are starting to gather some momentum, but remember, they are in the opposite direction to the prevailing trends. And until we see that there's a reversal, we need to just bear in mind that the higher time frame trend is still our driving direction. All right, Kiwi, similar picture, just coming back last week and closing inside the HTC channel. So again, another one where we could quite easily get a rollover and the start of the next impulse wave on this higher time frame trend. But in order for that to happen on the lower time frame, in this case the daily, we'll need to see a breakdown in this bullish cyclicity and a resumption of bearish cyclicity. This is a class 1 W pattern. I know that some of you who really just look out for that have been trading some of these markets, and that's fine. More aggressive, as you know, but that's all well and good as long as you are following your proven rule set. All right, so that's the majors and the minors. Moving on to the yen crosses, which were even more, I'd say, flat last week than those. Euro yen here on a weekly time frame, you can see last week was almost an inside bar. Really not much happening there. And here it is on the daily time frame, where that is even more apparent. Very, very obvious that that market is completely flat. And GBP yen, same picture. This, we have had 2 inside bars in a row, and that's what it looks like on daily. So as you can see, I'm just going to flip through these. We really haven't been interested in these. The one exception potentially is the Swiss yen, because what we have seen here, or what we did see last week, is a ringing of that low, which means that this retracement wave on single time frame analysis is over. And we are able to say that we do have the resumption of the next potential impulse wave or phase 1 wave on the weekly time frame. So that means that for you daily impulse traders, I'm sure you've been keeping a beady eye on this as well. And some of you even would look to start trading once you could see that that low was ringed last week. So dropping down to the daily time frame, yeah, you can see how we have now had a breakdown in the bearish cyclicity and, in fact, a resumption of bullish cyclicity. So I know that some of you folks took a trade with that bullish impulse candle, which also ringed that low. That's more of a hybrid, has to be said, because we hadn't quite had that confirmation on the weekly time frame with that candle not yet being closed. But as I say, that's also 100% fine. And also with a bit of a gap between Thursday and Friday at market open, you got quite a good entry there, and that trade is doing quite well. At the end of today, you should be able to move almost to break even, assuming, of course, that we get a higher close here on that 2-5 rule. So that's pretty much the best trade when it comes to the daily impulse across the board. But CAD yen, you can see that even though looking at it on the weekend, we had that inside bar and then a bearish continuation candle, albeit a low test, all very confused, which is why we like to go and look at the lower time frame cyclicity. But this morning's price movement looks like we might at last be ringing this low and seeing that move towards the upside. And that's what it looks like on the daily time frame, which is a little bit clearer. It basically just tells us that the market has been going sideways. But noteworthy here is that we have had a higher low. We are still very much inside of our HTC channel. So for those folks who are looking to trade hybrids and looking for that change in cyclicity, you're really waiting to see this trend line being broken. We are seeing a potential change in cyclicity with the phase 1, phase 2, phase 2, looking for a potential breakout in this bullish direction and a retracement back to this dynamic support level before it moves further in a bullish direction. So there is lots of potential across all of these markets, even looking at that Euro USD where we're coming up against that significant resistance level. All right, Aussie Yen, not so much. This is definitely not as interesting, but the main reason for that is because we did have that little high there about a month ago, which forced us to recognize a breakdown in cyclicity, and of course that brought all of this price movement squarely into the HDC channel, and also meant that we're looking at best at class 3 patterns here. So I haven't been able to do anything with that, but it doesn't mean that we're not going to see a similar picture with, and as you can see here on the lower time frame analysis, putting in another trend line, looking to get a couple of those points in. It may well be now that we're getting our first higher close, and if you look all the way back here, the only time it happened was in the sideways market movement. So there is definitely potential for upside here. Let's keep an eye on that though. And the last of our yen crosses on the Kiwi yen is also showing us that this low has been ringed at long last. Bullish impulse candle last week. The difference between this, of course, and the Swiss yen is that we have had this close well inside of the HDC channel. And many of you folks need to have that outside C close before you're looking to trade it, which is, of course, the more conservative approach. But with the close outside on that impulse candle at the end of last week, those of you who don't require the outside C close will be dropping down to the lower time frame, and potentially you may already have jumped into a trade this morning with that bullish impulse candle. So it's already a few candles away from the ringed low on this time frame. But having said that, Friday did give us that nice outside close and higher close. So depending on your rule set and how strict you are, that may be one that you've gone for. Now, one of the reasons why I would go for this is because this is a class 2 W pattern, and that higher close beforehand, as well as, of course, these higher lows, is definitely giving us quite strong indications that this bearish movement is over. That trend line is well smashed. Moving to the last of the lower highs in that bearish cyclicity, you see we already had the retracement back to that dynamic support level, and that's another reason why this was actually a good trade this morning. So I know many of you would have taken that, and that is definitely a good one. All right, so moving on to our euro crosses quickly. There's not that much to look at here. I'm just going to flick through it. Here's euro GBP on weekly. Clearly, I'm not going to be interested in looking anything on the lower time frames on that. Euro Swiss likewise, that small inside bar in the weekly time frame for last week, all inside HDC, no valid class 1 patterns at all. Here on Euro Cad at last, we're now seeing a breakdown in that bearish cyclicity, which has kind of been on the cards for a while, but for the first time we've got a ringed low showing us a breakdown in bearish cyclicity. So very much inside the channel, nothing to do on that one. That's come to a firm end at long last. Euro Aussie, also you can see there's no valid cyclicity here inside the channel. There's no consistent breaking of either support or resistance, and respecting of the other side, it really is very flat. And you can even see there's quite a strong downward twitch in our ATR here as soon as that big candle got dropped off the end. So the market is very, very dead across all of these euro crosses. And the only one, I suppose, that has shown even a little bit of life for some time is here on Euro Nzd. And that's just because that previous Kiwi weakness, but even in the last couple of weeks, you can see it's really dead as a doornail. Right, moving on to GBP crosses. Here you can see on Gbp Swiss just retesting the support level, but not managing to close below it, even though we had a bit of a market gap this morning. So another one that we are far from looking at trading at this point in time. Similar to Euro GBP in many ways, obviously. Gbp Cad, on the other hand, a slightly different story, but still sticking with that retracement theme. So last week giving us that spinning top. So there's definitely potential again that we can see here for a rollover and a resumption in this bearish trend. So let's have a look at the cyclicity on the lower time frame, where you can see that the bullish cyclicity here is just still intact, but it's really threatening. And even the trend line is, well, we'd have to wait for the end of today, but it looks like today it wants to break this support level on this dynamic on this trend line. So it's a dynamic support level in this case. Let's see what happens. If we get that breakdown in cyclicity, then obviously we have the potential for what a lot of people call a head and shoulders pattern. When we get that retracement back into what was support, would then be resistance, and then the final rollover. And of course, for me, ideally, I'd like to see a class 2M pattern before shorting that, which would mean that we've got an aggressive reversal with phase one. So all goes together, just a different way of naming them and looking at it. GBP Aussie flat, absolutely flat here on a weekly 1, 2, 3 inside bars on the weekly time frame. So today we're actually getting a movement outside of last week's low for the first time, as I say, in 3 weeks, but still nothing worth looking at all. And finally, of course, there's GBP Nzd, which we're also really not interested in, with that breakdown of bearish cyclicity some time ago. And we're just going sideways inside of that previous HTC channel. Right, so moving on to our other crosses, CAD Swiss, also a little bit more promising in terms of the big picture. But last week again, that's that continuation of a retracement, but coming down into a significant support level, which is the top of our HTC channel. So looking to see what happens here again. Firstly, dropping down to lower time frames to look for that breakdown in bearish cyclicity. Hasn't happened yet, but it certainly bounced off of the bottom of the daily HTC, and that may well lead to a breakdown in bearish cyclicity and a resumption of bullish. But there's quite this is quite a strong bearish move. But that being said, we follow our rules, and depending on how conservative or aggressive your rule set is, you may or may not be looking for an entry this week. Aussie Swiss, absolutely dead. This is just terrible here on weekly. And of course, just a quick look on daily. You can see that it tested that support level throughout the course of last week, but without any real intent of breaking through. So quite happy to leave this as it is and wait and see. We've got much more interesting pairs to look at. Aussie Cad, another one where we've got this retracement fully intact, potential class 1M pattern, but inside HTC, really not particularly interested in that. And of course, even here on the daily time frame, although we did get a class 1W pattern, for those of you who are only interested in that, and that's fine for you aggressive guys, that's all fine. But we are still very much inside of that HTC channel, and this technically is still a retracement. So I've got much better fish to fry than that. Aussie Kiwi, the last of our Aussie crosses, we've got this gentle, slow slide back into the preceding HTC channel. And although last week was a bearish impulse candle, we don't really care when we're looking at an overall weak picture like that. And here we are on well inside of the daily HTC. So nothing to look at, no class 1 patterns. Again, much better fish to fry elsewhere. Kiwi Swiss also, while it loads up, just nothing at all for us on this, both on the weekly and the daily. This is just rubbish. Staying far away from many of these. But Kiwi Cad, obviously, you can see across the board, these Canadian dollar crosses are showing some life. But again, another week of retracement last week. So waiting for the market to tell us what it's going to do with this resistance level. Let's look at the daily time frame. Yeah, bullish cyclicity still intact. It's testing that resistance level on the weekly time frame. We're waiting to see what happens. Okay, so here's gold, moving away from our currency pairs on the weekly time frame. Again, you can just see that there was nothing last week. Another retracement, though, you can see, even though it was a very small move. And there, those 5 days, okay, so it was a class 1W pattern, well inside of the HTC, but apart from that, it's really pretty flat. So gold, and the same goes for crypto, it's been really flat. We'll have a look at that in a minute. But anyway, let's look at this first on the weekly time frame. A strong bullish impulse candle bringing us back on the Dow here into the HTC channel with a very strong close during the course of the week. So the bulls still haven't given up when it comes to the stock markets, and you can see that throughout the course of last week, we had higher highs, higher closes. So still very strongly bullish in the short term, has to be said. Overall, the picture is still bearish until we see a breakdown in that cyclicity. The same goes here for S&P, closed back inside the HDC. That is true, and also coming up to obviously the bottom of that preceding XA leg. But even so, we need to wait and see what happens this week. There is definitely the possibility of a bearish resumption and also a retracement back into the HDC for me. I'm not going to trade into these headwinds. All of these resistance levels smack bang in our face. So it really is like riding into a strong headwind. And here on the Nasdaq, this is the only one where it hasn't yet come back into the HDC. As always, it tends to be the most volatile and also tends to lead the way. So this is always my favorite, as you know. That's on the weekly time frame, testing that resistance level, looking to see what it does throughout the course of this week. If it rolls over and comes back down, that will be quite a strong bearish signal. Okay, moving on to oil. Last week, we had a bit of a breakout of this short-term consolidation area, and it closed outside of it. So looking at that on the daily time frame, you'll see it broke out of our HDC channel and closed outside of it on Thursday, and obviously then Friday. So I know some folks on Friday would have started looking to trade this already, and you may well have jumped down to the lower time frame and got into a trade here. For those of you who are brave Friday traders, obviously this was a pretty decent setup right there, and you'd still be in that trade. Okay, Bitcoin, like I said, is very flat. Another very flat week after that previous bearish move, and here on the daily time frame, it's even more apparent. Really just going absolutely sideways. So I think today we'll be able to advance this, but it's not going to make any difference to our HTC channel at all. These are all very small moves based on that historical action. Right, folks, well, that's pretty much it for me. Quick one for today, and that's really because there was just so little happening last week. Definitely a week to sit in our hands. But as I say, there's real potential for a resumption of many of these trends and some nice breakouts. So we're really waiting for that to happen. And then, of course, we look to make hay while the sun shines. But again, as always, if you're looking to take part with us in our live trading room, where we actually look at that on a daily basis when we are trading, then please make sure that you, first of all, engage in the conversation with us on our Facebook page at The Convex Trader. And that will set you up to be eligible to be given a seat in our live trading room. And make sure you follow the page, like the page, engage with the posts, and you can also, of course, get access to all of our historical trading on our YouTube channel as well. So make sure you go and subscribe to that and hit the notifications bell. All right, folks. Well, as I mentioned, if you've got any questions, for those of you who are live with me today, you're welcome to drop them into our chat. And if you're watching this as a recording, then just use the comments below. All right, so here's looking forward to a great week's trading. Remember to keep your powder dry. Always look to manage your downside first, and then you can let upside look after itself. All right, folks, I'll chat to you later through the week. Bye for now.